people can see us settling in. Well, this is exciting. Hopefully our YouTube Live members are piling in. This is brand new for us. So for us to do a live broadcast like this and YouTube is a new experience. So we are learning as we go here. So welcome the world of YouTube. So I know we're just getting right there, but I thought it'd be fun to share some insight from yesterday. I won't mention names just because I don't think they would. I haven't gotten any approval from any of these individuals, but I serve on a task force, digital innovation blockchain task force for the state, and just recently got asked to serve on another task force, surprisingly, around AI. And
wow,
yesterday I was at the Capitol, and I only had one person who I kind of sent this link to, showing of our day trader AI. And I said, as soon as we get done with the meeting, I'll sit down with you and I'll just show you like what we did, and give you the link, let you go nuts on it. By the time I was done, I had about 15 people behind me from the Capitol. And these, compile members from, our House and state representatives to leadership. And then some of the public was there also just watching. And I think the thing that I heard the most was like everyone's eyes were like, whoa, what did you just do?
Yeah.
And I'm seeing a problem. I'm seeing an issue that we probably need to step in as a state, but we also need to step in on a federal level from a security standpoint. Like this is moving so fast that the potential security threats that it has on our country, but also within certain states and agencies, just probably did a 10x over the last 2 weeks. And I met with some pretty significant members in our state yesterday that are sharing this concern. And I'm hoping that we can keep up with it. I'm hoping that the state and the feds react fast enough to kind of help keep this thing in a box. So what are your thoughts on that?
Well, I don't know. We already covered this in a previous episode. Elon Musk is worried, and he helped launch this darn thing.
Right.
And he's not associated with it warmly, OpenAI, anymore because of he had a departure with the other owner of OpenAI on this very thing, and that is the ability to govern how this thing moves forward. As a world and as a country and as a state, we need to figure out what the limits of this thing need to be, because it could get out of control very, very quickly.
Yeah, I agree.
And the cat's out of the box. It's already changing daily. So anyway,
well, let's jump in. Let's get that disclosure up and jump right in. So welcome guys to another episode with your hosts, Matthew Pohl, Todd Tolman, the Traders Pulse podcast. This is our disclosure. We're not going to take any liability for anything you do around here in terms of trading or investing or risks. So obviously read through this. This is for educational purposes only. So just to give you some topics, what we're going to be covering today, I'll start with the end and then go to the beginning in terms of topics. We are going to be talking about Auto GPT today and how it is, like, no question, if you are a trader or an investor or doing anything in the financial world and you are not leveraging and watching this tool, you will be left in the dust. We're going to talk about that at the end. We also have some topics around, we've got a couple. I actually brought up the announcements, Todd. I want to cover those just really quick that happened today. We're also going to talk about this mortgage subsidy thing that got passed by the feds, punishing people with good credit. And then last but not least, we're going to talk about First Republic. We thought the bank scares were over, and they are not. So let's save the AI towards the end. Which of those three, Todd, do you want to hit first?
Oh, let's talk about Biden. So it's actually the Biden administration that's issuing this new credit rule. I don't know where to go with this other than, I just think, yeah, here it is. Biden to hike payments for good credit. So the way this pans out is that and this is supposed to go into effect May 1st.
Right.
If you have a 680 or higher credit score, then they're saying on average, you're going to pay $40 more per month for a home loan of $400K. So basically, if you've been responsible and you've been managing your credit as a good citizen, we're going to penalize you for being good with your credit. And here's another thing: home buyers who put down more than 15 to 20% or 15 to 20% down on their down payments will get hit the most. So if you come to the table with more money, because you're a responsible borrower, right? And you have great credit, or you have better than 680 credit, we're going to make you pay a little bit more every month because we want you to bail out the people that haven't been as responsible.
This makes no sense. This just shows, this to me shows why the dollar in our country is slowly sliding.
Yeah.
The policies that we're putting in place to punish good behavior and reward bad behavior from a fiscal standpoint is insane.
Yeah, it should be illegal for the executive branch to do something like this simply just to appeal to their voter base. It's horrible. This is, I don't know. I just think this should be illegal. Yeah. Senators, if you're listening.
Yeah, I mean, if we don't change how we're doing politics on a federal level, and all we're doing is appealing to voter bases, trying to get votes for the next election, the overall economy will pay the price. Yeah. So yeah, you might, and I get it, maybe you've got really low credit and you're going, yes, I'm going to save, and it's not going to be much, it'll be like $20, $30 a month on your mortgage. But if you think that's a reason to say yes around this, wait till, 10 years from now, when you're stuck at a wage that can't keep up with inflation. Wait till you're stuck in a job that isn't increasing and keeping up with the current inflation and price increases. You got to be thinking about tomorrow. This whole appealing to people's emotions and stuff today has got to end. And I thought that's why we elect leaders. That's why we elect these people who are supposed to be smarter than us, is so that they're putting together good policies to keep this country free and safe for tomorrow, not today.
Right. Well, that is not the world we live in today.
Yeah, and this is not a partisan issue, guys. this is both sides. It really does. I see both sides, the Republicans and the Democrats, doing this. This is not just the Biden administration. Well, they're just happen to be the ones that are running things right now. But this was happening during the last presidency also. We've got to stop pandering to the now emotions and voters, and we've really got to be looking what's the impact going to be long term. And I don't know what the solution is, but I'd love to hear you guys' comments and feedback in the chat and in the comments below. All right, let's move to the next thing. We got lots to cover today. I'm going to jump on this one, Todd, since I have a little bit of, I didn't really prep you on this one.
Oh, this will be fun.
I want to show you guys just the announcements really quick that happened today and just skim them really quick. So today there were some pretty big announcements that came out. I highlighted the top ones. You've got personal income month over month, personal spending month over month, core PCE price index, year over year and month over month. So when you look at these, this is just really easy to explain. But when you look at these, you're looking at actual versus previous versus forecast. And consensus, that's fine. But actual is what actually came out. Previous was what happened either last month or last year. Forecast is what the brains and the geniuses, the we'll call them just forecasters, predicted it would be, and they're either right, wrong, or it was the same. It was like they hit it spot on. Well, personal income month over month, the forecast was that it was going to actually increase, and it didn't. So they thought, which this is actually good news. Like this would be good news for inflation, right? Because what you want to get inflation down is although you want job growth to increase with inflation, if you can keep personal income stagnating, it's a sign that inflation is also stopping. Although I personally don't think income's kept up with the last inflation run that we had. So this really did nothing. Actual came at 3, forecast was a little higher, so it came in a little low. So there'd obviously be some negative impact to the markets based on this. Personal spending month over month. This is how much an American was swiping on their credit card, buying consumer goods, whatever. The forecast was that it was going to be down. So it was actually up last month. They said, this thing is going to get way worse this month. And it was worse than previous. Like there was like no, or it wasn't worse, it was just no change. Like it was just the same as last month. But they actually predicted it was going to go down. So one of two things in my mind are happening. Either consumers have the money and are making the money to spend the same, or they're piling on more debt. And I don't have time to go through that, but if you do a little bit of research, you'll actually see that the debt charts are climbing. People's credit card balances are actually climbing. And so my thoughts are, this is actually still negative news, but it's because consumers are piling on the debt. They're not actually making more, and they are spending the same, but the impact is going to be debt in the future. And then you have PCE, and this is probably the thing that's going to move the market the most today, and it did this morning. Kind of had this big news. If you look at Amazon, there was this like massive spike based on the first news. And then as soon as PCE came out, it like dropped like a rock. And so PCE is going to have impact in the market. And you can see that the previous was a 0.3% increase. They forecasted 0.4, which is an increase for one, and two, a higher increase than the previous month over month. It actually came in lower. And so to have a little bit lower actual compared to forecast, the market's going to adjust. And so you're going to see a contraction. It's typically bearish. And then PCE year over year, they thought it was going to be 4.5. It also came in lower. So this is the data, guys, that we're dealing with today. Definitely strong for the bears. Any feedback? Or
yeah, well, so just so everybody understands, PCE is it's different than the CPI, right? Consumer Price Index, because this particular index, the PCE, only measures goods and services targeted towards consumers.
Right.
It's just goods and services only. It doesn't have all the other stuff that CPI does. So what this has is just spending. These are just prices that the consumers are paying. So everything's going up in price. We still have inflation, basically.
Right. This PCE is actually one of the main indicators that the Fed uses. And so my prediction based on this is you've got some bearish pressure on the markets, but in terms of interest rate hikes, I would anticipate we're going to have some more interest rate hikes based on this.
Yeah, because we have more inflation. This is an inflation indicator.
That's right. That's right.
I just don't get this. Inflation going up and the economy's stagnating.
It's stagflation.
So this is stagflation.
Yep.
At its best. And the guys in the Fed with all their levers and buttons that they try to push to get things under control, there's nothing you can do about stagflation because they're on opposite ends of the scale.
Right.
You want to stimulate an economy, you have to lower the interest rate, not higher it.
Right.
But if you have inflation, you have to higher the interest rate to bring the heat down on pricing. And so it's counterproductive. There's nothing the Fed can do to control this. It just has to work itself out. Even though I think they're going to try to raise, they're going to go the other way. They're going to raise interest rates.
Yeah, no
And
question.
it's just gonna send us in a deeper tailspin, I think.
Yeah, and I think it's already priced in. There's a lot of banks that are already calculating what they think the Feds are going to do. It's already priced in that we're going to have another quarter point rate hike. I think there's some economists that are saying two, so another two singular quarter point hikes going forward, and then they'll calculate from there. I tend to agree with that. I think we're going to see at least another half go up, and I think it'll be incremental. I think it'll be 2 quarter points going up.
Yeah.
And then from there, we can kind of look at, how the markets, it may take another bank failing to really get this thing to.
This is bad because interest rates today are at 6.43 on average. And housing prices are still high. Affordability is way, way low.
Right.
I mean, real estate's going to come to a screeching halt.
Well, it has
into the
commercial.
We have elevated pricing on homes. It came down a little bit in February, but it's still pretty elevated. And add that to a higher interest rate, Matt.
Yeah. Game over.
Even Utah, everybody seems to be coming to Utah right now. I don't know why, but even Utah's got to slow down.
Yeah. Yeah. And I mean, the markets that were pumped up the least will have the least impact, I believe. The ones that were overinflated will have the highest impact in terms of a pullback. Utah is one of those markets. Utah was one of the fastest growing real estate markets in the country during COVID. Now, you could say that the population growth will help stabilize that. However, when we had the last mortgage crisis and fallout in real estate, it was really clear to see that the ones that were inflated the most also dropped the most.
Yeah.
And it was almost, the parity was uncanny. Really.
The biggest difference from before is they kept interest rates low while everything was blowing up.
Right.
So anyway, I mean, interest rates are high right now.
Right.
So
we'll do QE.
Caught it in time.
I think QE is going to happen. My prediction is it'll probably be 16 to 18 months out that they might start considering doing QE, which is, by the way, that's quantitative easing. So that's when the Fed step in and start lowering interest rates. And what that does is it allows lending and allows money supply to go up, which actually stimulates the economy. So for those of you who are like wondering, is this the end game or is this the end? No, the Fed has lots of cards to play still, has lots of levers to pull to kick the can down the road further and further. And they have no choice. They can't change political policy. This crap that's happening in the White House, and it doesn't matter who your candidate is or who you voted for. They're all doing it. They're freaking digging this country into a hole.
Yeah. I disagree with you. I don't think the Fed has anything they can do. I think they're out of range of what their levers and their knobs can do.
No. The Fed, I mean, this thing, they're going to keep playing the same game that they do. Yes, I agree that like we're in a hole and the hole's just going to get bigger, but we have tools to keep kicking the can further and further down the road. And we'll be the last domino that falls in terms of a country, right? We bail out all of our neighbor countries, anyone that we've got secret handshakes with. Well, they're not really secret, but anyone that we're partners with in like the UN or have like global pacts with and partnerships with, we bail those guys out when shit hits the fan. I mean, that's really what happens. But who's going to bail us out when it gets to that point where we've just kicked the can so far down the road that we finally have to realize what we've done? There's no one to bail us out. And that it won't be a national, in my opinion, won't be a national reset. It'll be a global reset. And it gives opportunity for countries like China and Russia to really, I mean, have a stake, right? To go in at that point and like say, okay, well, clearly we don't need the dollar anymore. We're not going to peg ourselves to this country, to the US anymore. It's kind of a more equal playing field. So why would they do that in that moment? They would probably just start to, you start to see all these forks in countries trying to.
I personally think that that's what's going to cause the downfall of the dollar. The dollar's not going to sink, and then Russia and China is going to step in. Russia and China are going to force their way in with their currency and their new petrodollar, and that's going to cause all those dollars around the world to come back to the US because nobody's going to want them anymore.
Yeah.
And that's just going to drive inflation up even more in the US.
We've
I
got
words that I could use for that situation, but they're not appropriate to say.
Our users might like that. It'd be like your highlight reel for the next. Hey, let's jump into more local news. So we've got some pressure, no question, based on the announcements. We've got some pressure on the economy. The Feds have not fixed this. Inflation is still climbing. So interest rates are going to still have to go up, which means there's going to be more contraction, more pressure on these banks. And we thought the dust had settled. In fact, if you look at bank prices, you'll see that bank prices started going back up after Silicon Valley Bank, after WAL was having its issues. There's been lots of talks about banks, but I want to bring out this one right now because this is happening this week. There's a bank, and you guys have probably seen this on the news as much as it's being hidden, but the First Republic right now is in trouble. And I just picked 3 headlines from like a Google search, and these were the first 3 that showed up. And it's all about First Republic. And just the headlines alone are pretty revealing to what's going on. But First Republic's in trouble. They've already been bailed out. They're still showing financial troubles. And no one wants to buy them. No one wants to come in and get them at their existing sticker price or current value. Everyone's kind of, it's like there's a deal about to happen and everyone's waiting for things to get a little worse so that they can buy it for a lot less. What have you been seeing on this, Todd?
Oh, this is the first time I've seen it, but all I can say is let it happen. The bank, listen, banks are privately owned institutions. And just like any business, they need to be treated like a business. And when they've been poorly managed, when they've when they've ran the business into the ground, then someone that knows how to do a better job needs to come in and buy them. And that's what capitalism is all about. That's what the free market is all about. This idea that the profits can be private, but then the losses need to be socialized is ridiculous. This doesn't work. Socialism
it's socialism for some and capitalism
doesn't work.
Others. Yeah,
this is just going to create more bad actors. It's going to create anyway.
Well, when we run things like, here's what I'm curious your thoughts on. When we set up a precedent that we will bail you out, that we will go in, step in and bail you out of this situation, what does it teach these banks to do?
Well, it's a moral hazard. We've talked about this before. When your upside is blue sky, but your downside is only a couple feet deep, then you take more risk and you go for it. You do things that you don't normally do because in the end, the upside is so much bigger than the low side that you'd be a fool not to take advantage of it.
Right. Yeah, well said. So guys, keep an eye on the banks. There's definitely some opportunities there. I've been playing with bank stocks on the buy and the short side. There's definitely some opportunity. You want to be watching First Republic because this will tip not just this bank, but all small banks. I would be looking at, your big banks are likely going to ride this out really well. Your small banks are the ones that this news, and if and when there's like a trigger point where First Republic has a run on it, or it has to close its doors or get bought, or whatever, that news is going to impact all the other small banks. So keep an eye on that in the upcoming week. Let's get into what I'm really excited about. Let's get into this auto GPT. I'm going to bring this up and share. I'm going to go a lot of our viewers don't know how to get access to this. So I'm going to just go into GreenChart really quick. So if you guys are new to this and you are in as a day trader, or you're someone who is making investments, or you're managing a fund, or you might be an investment banker, it just doesn't matter. If you've got money in the market that's working for you and you are not using a trading AI of some level, which I would say is most people, you're going to be behind the game in about 6 to 8 months is my prediction. So we've actually deployed an AI for the public that's free. It's in beta, obviously it's not ready, but it'll at least give you a sense of what's coming. And we're letting people use it so that you can be on the front of this. And I'm going to have you guys follow our journey as we start to release tools and additional features, but to kind of give you some backstory to this, and I'll go into it. So it's greenchart.com. You're going to click on Day Trade GPT. That will launch the terminal, and we'll go through like how to work this in a minute. But the AI world is changing finance. The AI world is already being implemented in a lot of trading strategies. In fact, I was on a call with someone who helps set up funds nationally, and I was quizzing him, like, out of the, he's set up hundreds of these funds. Out of the hundreds of funds, like what percentage of your funds are financial versus like real estate, or like, you can put a fund together to do all kinds of crazy stuff. And he said, yeah, it's about 40%. I said, how many of them are using any form of artificial intelligence to like manage the money, to manage the fund? He said about 20. So of 40, 20% are actually even using any type of AI. These are funds, guys. These are like the guys you give your money to that are supposed to be doing a really great job and like using the latest and greatest tools and technology to make sure that your money is safe and your wealth is preserved. Only 20%. And I would say globally or even nationally, I think his numbers are high because he's working with a lot more younger, more sophisticated groups, where these older hedge funds and money managers, they're not doing this. In fact, I've heard the banks are scared to death of this. They won't even let their executives and employees deploy an AI on a device because they're just petrified by it. So here's where we're at. AI is it's not that it's coming. AI is here. We have ChatGPT, right? This enormous tool now. It's a resource, that it's a language learning model. And now Auto AI just opened up our access to the web. So we had data from OpenAI that only went to a certain time period and then cut off, and that's what ChatGPT uses. Now we've given that in our prototype here access to the full wide web, access to load files, access to upload data, download data, create spreadsheets and databases, analyze that data, optimize on that data, and we're giving you free access to it right here. So I want to kind of demo this. And Todd, if you could play the audience in this case, if I'm doing something that's like, wait, I don't understand this, please go over that again. Stop me, because I think it's valuable for us to really take the audience's view. When I was showing this at the Capitol yesterday, the type of questions people wanted to ask, I was like, no, that's too simple. Like, you're thinking too small about it. You don't understand how powerful this is yet, clearly, because you're asking it questions that you're like, ooh, that'd be cool. And it's like, you don't even get how deep this thing can go, how intelligent this thing really is. Yeah. And I'm still learning.
I mean, the only thing I would say about that, Matt, is that when you first land on this page and you start experimenting, start with something simple. Say something that maybe you know the answer to, right? And see how quick it comes back with an answer, and then maybe make it a little more difficult the next question you put in, and watch how it progressively adds more and more jobs to itself as the question gets more and more complex. I think that would be a good way to actually see how incredible this is.
Yeah, I agree. I have to remind our viewers that you are in demo mode when you first deploy this. In order to expand on it, if you have an OpenAI key, you can put that key in the settings in the bottom left-hand corner. And in the settings, I'm not going to show you because it'll show my key, but in the settings, you can put in your key and then it will allow you to go deeper. It'll allow the AI to keep running and looping and use the full 2000 tokens. So you're kind of limited in demo, but it's still insanely powerful. I'm going to show you one, Todd, that someone brought up to me yesterday that I didn't even think about it. Like, I didn't even think like, oh my gosh, this is something that has to do with finance, has to do with data and probabilities. But as a finance tool, as a trader tool, I never thought like, oh, we could use this also. And it has to do with gambling. I had someone ask me like, hey, so-and-so is playing tomorrow. And in fact, it was, it's the, who's playing today that they were interested in. Let me pull it up really quick. I think it was the Kansas City. Yeah. Oh, yeah, it was Royals. So it's Kansas City Royals versus the Twins. And
So
they're playing
odds
today.
makers. You're looking for the odds for the game?
Yeah. So they were like, well, ask it who's going to win tomorrow. And I was like, I was like, interesting. It can do that. It can optimize. It can use predictive models. It can run all the data online to ask. And I was like, oh my gosh.
As long as it has the data, we got to remind everybody, if the data is not available, it probably can't answer the question.
Right. But now it has web. So I did a deep dive on this, Todd. And I asked it a bunch of questions. And the first one I just asked it, and we'll do this one. We'll call it Royals. Because this is fun. This is like stuff that we like, people get this. Versus Twins. And by the way, the data that it's going to give us, you could find online. There's tons of betting sites out there that actually gives you this type of data and odds and predictabilities. But I did this and I said Royal versus Twins. And I said, open a browser. And it's important to say that, by the way, if you want to search the internet, you have to tell it to open a browser and then it knows to like search live data. Just an interesting thing I've learned in the last 24 hours opening this can of worms. But open a browser and search for MLB data to see who is most likely to win the Royals versus Twins game and deploy. Here we go. So what it's doing, which guys?
Don't you want to tell it which game?
I did. I said Royals versus Twins game.
I know. They probably will play a bunch of times this year. Which game?
I said today, didn't I? Oh, I didn't. No. Let's start it over. Yeah, let's start it over. I like that. Open the browser, search for MLB data to see who's most likely to win today's game. Royals versus Twins. That should do it. So what it's doing when we hit deploy, it's going to take your goal and it's going to chop it up into a bunch of subtasks. So in this case, it's going to launch a web browser. It's going to open a search engine and it's going to search for MLB data. Let's go back up to determine the likely winner of today's game between the Royals and the Twins.
It even fixed your spelling error.
Yeah.
I put today's, it was possessive. You forgot to put the apostrophe S on today's.
Yeah, it's
look at that.
So smart. Yeah, it's so smart. So looks like task completed. I successfully launched a web browser. As for the search, the MLB data, I have found that Kansas City Royals are playing Minnesota Twins today. Unfortunately, I cannot provide a prediction on who is most likely to win. Yeah. So this is what's interesting, guys. This is where people in like ChatGPT or using other AI models outside of auto AI would get stuck. And then they would go, oh, well, the AI has its limitations. This is the difference. When it hits something like this and doesn't reach the goal, this AI goes nuts. It goes, oh no, we don't like that. I don't like that it didn't hit the goal. We're going to try a different way to get to the goal. And so it'll keep doing it and just watch. It will work through it itself. It's like an employee complaining to you. Like this is its complaint. Oh, I can't do that. That's too hard. I have my limitations. But then it goes back in and goes, but we'll try again. And so look what happens. it creates new tasks. It changes its task. Its way it's going to find the data, it changes to see if it can still achieve the goal. So what it did is it created a whole new set of tasks. And then it executes, response, search engines open, mark complete. Okay, now it's going to go through it. Search MLB data, determine likely winner based on recent statistical gameplay. Minnesota Twins are most likely to win today's game against the Kansas City Royals. And guys, go look for yourself. Go look online, and sure enough, the money odds have the Twins likely to win. If you keep watching this, you'll even find the odds. They'll even like show it. I've had it pull it up, and it's like, oh, it's a 200, a negative 200 to a positive 300, or however the money numbers work, but it's usually in the hundreds, and it'll show like the likelihood based on betting that's happening, who's more likely to win.
Will it actually show the odds somewhere?
Yeah. Just keep going. I bet you
So
will.
I'm curious to find out if the odds are different than what the betting sites are saying.
It was the same. When I did it this morning, it was exactly the same. Look at this. It will actually do, without me asking it, it will go out online and look for data on players, their hitting records, their catching records. It will search the news for anyone who's injured and if they're going to be back and playing today. I mean, it's doing all the things that these websites, I mean, guys, this tool just eliminated like half of your guys' apps that you're using to make bets and get probabilities. It's probably better. Now, again, massive disclosure, and it's on the site. Don't use this to bet yet, right? It sometimes is wrong. It's not perfect. And so don't make your bets. Don't do anything around gambling based on what you're seeing here. But I mean, this is where we're going. This is the journey we're taking you on. I'm going to stop it.
What's happening here is this is like jumping from my Audi into your Lamborghini.
A Bugatti.
But yeah, right. But I mean, this is accelerating your ability to do research. Yeah. It's allowing you to get on top of all the information. This is I don't know how many times quicker than going to Google, probably 10 times quicker as far as research than going to Google, because it allows you to pinpoint the data more quickly.
Agreed.
And you're not encumbered with ads, at least not yet.
Right.
Ads here.
Exactly. Not yet. And we want to make this as free as possible, guys. We think this is really exciting. And I think as we share our experience on this journey, the information that we'll collaborate on will only rise the tides for those participating. To give you an idea, if you're listening to this video right now, if you're live right now, you are in the 1% of people who even know about auto AI. I was this week, and Todd can confirm this week, we were in conversation with some of the top AI people in the country that are supposed to be the leaders for these insanely large tech companies, not to name who they were. And they didn't even know that this tech came out 2 weeks ago. They didn't even know that there were people in a basement that had deployed an auto agent and that technology was possible. Since the day it happened, I've had both of my CTOs drop what they were doing and jump into this full time. I've had their dev teams like, stop what you're doing. This is all you're doing. I've been in it 12 plus hours a day, still every day working on it. And we've created a prototype and it's working. And it's insane, like what we're seeing here. All right, let's do one about trading, because a lot of our guys here are here for trading. And I did a search that was really unique that I want to reflect it back into this tool so people can get a sense of like how powerful this is, a real simple one. And then Todd, I would love to hear from you, like one that you've ran or one that you're hearing from your audience or people you've talked to about this that's like a fun one that we could do also. But I went online and I looked at like, what are the biggest challenges that like traders have? And one of the 10, and you hear this all the time, and it's in all the books, is to trade the trend. Like you don't want to trade against the trend. And so I I came up with a question that I think most people on here would be interested in, because if you looked at your trade results, you'd probably find the ones you get in trouble in the most is when you were trading against some long-term trend. And so we're going to do a quick auto AI on the S&P 500 trend strategy. So we're going to call it S&P 500 trend strategy. So this is going to be some type of strategy we're building for ourselves as a trader to make sure we're staying within the trend. And then I've already got this lined up, but we're going to create a day trading strategy. So we're going to create a day trading strategy that focuses on trading the trend. That's simple. So this is going to be like an instruction guide. It's not going to, well, if you let it keep running, it will write you the code. It will create a strategy using indicators. It's just going to keep going and going. But I want to show you, like, in the beginning, how simple this is and how this advice alone might be the thing that's keeping you from making profits in the market today. So I've deployed. It's embarking in our new goal. It's added the tasks based on the goal. It's created 3 as we've set it up to do. So it's going to gather historical price data for the selected assets, which is the S&P 500. It's going to analyze the data to identify the trend direction and strength. Then it's going to develop a strategy that exploits and identifies trend through entry and exit signals. That's an interesting word. I have not seen it say that before. Exploits, interesting. So let's see what happens. It's executing, it's gathering historical price data on the selected asset. Awesome. It's added a new task. So it did this, and it, based on the information it got, this is really interesting. It added a new task based on the information it got from this task. So it's identified key technical indicators that are the most effective in determining a trend direction and strength. See, I didn't even ask it to do that. And it already knows, based on some research it did, that we probably need an indicator that's there to help us determine the trend, direction, and strength. After analyzing the data to identify the trend, direction, and strength, based on the given objective of creating a day trading strategy that focuses on trading the trend, my first task as Agent GPT is to analyze the data to identify the trend, direction, and strength. To identify the trend, direction, and strength, I will analyze historic price data of the stock or asset being traded. I will use various technical analysis tools and indicators, such as a moving average, MACD, RSI, Bollinger Band, and others, to identify the trend, direction, and strength. Excuse me. Once I have identified the trend, direction, and strength, I will create a day trading strategy that focuses on trading the trend. This strategy will involve buying or selling the asset based on the direction and strength of the trend. For example, if the trend is bullish, I will recommend buying the asset. If the trend is bearish, I will recommend selling the asset. So it's doing all of this. It's building like this plan for you. As a Agent GPT, I have analyzed the data, identified the trend strength, blah, blah, blah. I recommend creating day trading strategy that focuses on trading the trend. This strategy will involve buying and selling it. Okay, so it's like, gathered a bunch of data. It's telling us kind of what it's going to do, and then it's going to keep moving through the tasks. So I'm going to kind of go through this quickly because it's so much more meaningful if you're doing this, but I'm just going to skim through this. It looks like it created a MACD strategy. So it says the strategy will buy when the price breaks above the 50-day moving average and the MACD line crosses above the signal line. For exit signals, the trade strategy will sell when the price falls below the 50-day moving average and the MACD line crosses below the signal line. So you could go on to GreenChart today, set up the S&P 500, create a 50-day moving average, and when the MACD line crosses above the signal, that's when you buy. And when it crosses below, that's when you sell. That's what it's telling you to do. Creating a trend-based trading system. Like, that's simple. It's just giving you a strategy now to trade the trend. And I would actually agree with this. When you're using MACDs against a moving average, it tends to do that because the moving average is going to help you stay within the trend. The MACD is a little more volatile, and so it's going to give you buy and sell signals. And so when it happens together, now you've got a trade.
Hey, Matt.
Yeah.
I wonder what it would say if you asked it to help you to put together a money management strategy. Because we know that entering a trade is one thing, but how big of a trade should I take?
Let's see. So I'm going to
Should
start it.
I don't know if we've even tried this. I don't know what this would do, but how
Let me
to
see if it
stop.
gave us. Let me see if it gave us anything like that. And as it ran, by the way, guys, as we were like, you can't even process this as fast as it's moving. I'm only look at the dial on here. I'm only halfway through all of the research it's done and recommendations that it's made. So like, obviously, you've got to stop it at some point to catch up.
Another thing I want to point out is sometimes it'll take an opposite position than it did earlier.
Wow.
Because it's digging deeper and deeper, it's changed its position. So
Wow, this is incredible.
you got to it's just going to keep digging until you're happy with the results, I suppose. But
I mean, this is like 5-year graduation data. Like if you're 5 years or less as a trader, I'm reading stuff on here that you probably don't even know exists. It just did an RSI example of how to trade the trend. It did a Bollinger Band one that I saw above. Did a moving average to RS. Look at a moving average to RSI strategy.
there's your stop loss, Matt.
And then that's exactly what you just said. Stop loss of 1%, take profit of 2%.
Wow, a 1 to 2.
And if I let it kept running, it would want to optimize this. It would just keep going down this rabbit hole.
Right.
Yeah, this is incredible. Let's do another one. I'm trying to get out of the box because I've been really in the box with strategies and optimizing those strategies. What else would our users want?
One thing that I was curious about trying is just like what the general direction of the dollar is going to be over the next 30 days, based on unemployment, GDP, housing sales, consumer credit.
So more fundamental. Okay.
Yeah. And I would say I can give you exactly what to type, Matt.
Okay.
So just say based on the current reports of unemployment, comma, GDP, comma, housing sales, and consumer credit, which direction will the US dollar go compared to the euro?
How about we just say which direction will the EUR?
I tried that. It's not it for some reason it doesn't. Sometimes it doesn't understand what that is.
Okay.
What direction will the dollar go?
Dollar. Yeah, that makes sense.
Compared to the euro.
And again, if you'd run it again, it may have gave you totally different results. Like it's fascinating how deploying the coach more than once, it will send it down a different rabbit hole and find the answer. Which direction will the dollar go compared to the euro?
Over the next 30 days. Yeah, it's interesting. So one thing that I like to do when I'm trading, when I'm starting a new month, is I want to kind of get a 5,000 foot view of where the market's going to be going.
Sure.
So this is really good research. I mean, this is research that would have taken me potentially days.
Yeah.
And so this is an amazing tool if you're trying to get some fundamental research done to get a feel of where a currency pair might be moving in the near future. I mean, this is indispensable. So what's interesting is that it's already broken everything down into multiple tasks. It's going to extract GDP data. It's going to scrape the latest housing sales data. It's going to access the latest consumer credit data. And then it's going to compare. It's going to do this both for the Eurozone as well as the US. And then it's going to compare to see which currency is likely to win the battle over the next 30 days. I mean, imagine having to, do this, putting everything in spreadsheets,
No thanks.
pulling all your data from all your different data sources, looking at analyst opinions on the internet, and just trying to stick your finger in the air to get the direction of the wind, right? This is what we're doing. And this thing's already come back with probably more information than we have time to read. But yeah, so anyway, it's extracting, it's analyzing.
Look at this. It did one execution and then created 4 additional tasks based on that.
Scrape the latest housing sales data from the National Association of Realtors website.
This is a big deal, guys. This is the game changer. We just took AI, your ChatGPT thing that like wouldn't allow you to search the web and only had data up to like, I think it's September 2021 or November or something. And we just gave it access to the web. Like that alone, just the amount of depth and what you can do with this to have website access is insane.
Yeah, this is huge. This is like, start off with one person working by typing in the question, and you've got about 20 people working for you right now.
Yeah.
Yeah.
If you have a job as an economist or someone who's supposed to like do like you're an analyst, we probably just took your whole weeks of work and you could do it all in a day and then just go like,
don't tell your boss.
Yeah, don't tell your boss.
I mean,
you're
gonna get a raise,
tell your
man.
friends about this, but don't tell your boss.
All right, so just keep going down.
Oh, this is interesting.
Yeah, that is interesting. Consumer credit increase.
Right, it's pretty significant.
It's because people can't pay for these. I mean, they can't pay for their food, so they're using consumer credit to buy food.
Right, I keep seeing my credit card statements. The interest rates keep going up every month.
See, we're starting to get to the end of our hour. I wonder if you can go to the bottom.
Yeah, I gotta stop.
Find out if we've got a recommendation.
This one got stuck in a loop. It didn't want to give us predictive. There we go. Here's the prediction. See, like it won't do it. It's like ChatGPT. You get that thing where it's like, sorry, I can't do that. I'm a language model. It will do that sometimes and get stuck like a bad employee who doesn't want to do his job. But then it will come back with an answer. It'll like navigate how to get it.
So it looks like the dollar is going to appreciate slightly against the euro. Right?
Right.
So that means the euro USD is going to maybe go lower.
Yeah, and I would actually agree with that. I think my sentiment is pretty bullish on the dollar versus the euro right now.
Yeah.
I mean, with all the continental tension that we aren't subject to because we are an island, in a way, we've got oceans on both sides. We're not subject to a lot of the continental tension that Europe has. The war in Ukraine is a weight for them, as much as it is for us financially. More so it is for them because they're neighbors. There's land that could be crossed over there, and so I think it creates a lot of geopolitical tension also. Yeah,
but what's interesting is that the U.S. has a 5% bank rate, right? New Zealand has a 5.25%, but the euro's 3.5%. Their interbank rate. So you think that the dollar would just be gaining huge against the euro right now, but it's not. Which
I want to show these guys,
reflects that the economy is somewhat weak, even though our interest rates are high. And when interest rates are high, as you know, everybody pushes their currency to the higher interest rate currency, right?
Right.
But it's not happening because people are spooked about our economy.
Well, and you heard the Social Security scare. I mean, yeah, foreign nations are complaining about pushing the retirement age by 2 years. We've done that multiple times, and the backlash we had in the US was minimal compared to what's happening in foreign nations right now. I think the sentiment on big government taking care of us and then changing their minds, people here, because we're a little more self-sufficient, we've been taught to be a little more responsible than a lot of these socializing countries. You have these countries that are a little more social, where people count on the government to take care of them, and then when they don't, they go nuts. And so of course that's going to have it's going to have weight on your currency. It's going to have weight on how GDP performs as people strike and don't go to work, and unions, stand with their pickets and loudspeakers and megaphones.
Protests.
That's gonna affect production for sure. It's the bottom line is gonna get impacted, which is at the end of the day your currency.
So for our viewers, just coming full circle with Day Trade GPT. Do we want to review real quickly how to access that, Matt?
Yep, and then I actually want to show it one more thing, because this is also a game changer that I want our viewers to understand. And let me just summarize this really quick. So I'm going to bring this back up. Let's do it this way. What I'm going to do is show our viewers how to get back into this.
So it's really simple. You just need to go to greenchart.com. And there's a link at the top. And Matt, just pull up the website, greenchart.com.
I'm working on it. Sorry. There we go. So I'll just go backwards really quick.
So right at the top, it says Day Trade GPT. Just click that link right there, and that will take you over to Day Trade GPT.
I want to show these guys, now that we're here, just one more feature that this has that's groundbreaking. It's the most innovative thing that we've done in AI up to this point. And the fact that it's on the web and you have access to it also says something. But I'm just going to call this Google Drive. Optimize. So what we're going to do is I'm going to open a web browser and analyze the data sheet. And well, I'm not going to optimize yet. It probably is going to want to do that, but I just want to show you that this is possible. And then you can do some really fun stuff with this. So this is a test portfolio. This is not real results. This is all hypothetical and made up. And I made a spreadsheet that you could pull off your broker statement, right? You could go to your broker statement, export into CSV, import it into Google Drive. And because this has web search capabilities, since it's not on your computer, you can't just put it in a file. You can put it here, make it open to the public, and then have ChatGPT grab it and scrape it and analyze it. And so all you have to do is grab the link at the top, copy it.
Ooh, this is scary stuff, Matt.
I know, put it in the web
browser.
This
is really scary right now.
And search. And it's going to go into this Google Drive link. It's going to open it and it's going to search it. And it doesn't even know what it is. I haven't even told it what it is. I have actually a way. I've actually created a prompt that says, open the web browser. In A1 are the definitions. Row 3 are the terms. This is a day trading log, optimized for best results, looking for optimal take profit and stop loss, days that I shouldn't trade, and it gave me the feedback. I use a couple softwares, quantum system softwares that you can purchase online to do analyses. We do this actually at our trading group. My business partner in a different company uses this to analyze multiple trade accounts. And we just eliminated that software using this. We don't have to use their software. I just eliminated analyzing subscription with this data. Now we're using this on an actual computer, so like we can read and write files better. But guys, that's what's coming. That's the journey we're taking you on, is we're giving you the ability to do this. So anyways, it goes through it. It doesn't know what the data means, and so you have to kind of give it direction that way. But we'll change this because this doesn't make any sense. But we'll call it day. We have some time, right? Yeah, day trade.
You got 1 minute, but we can go a little over today.
Yeah, we'll go over just really quick. So we're going to open web browser, analyze. We're going to call it day trading results. And I'm not going to give it as much details about like what line means what. I'm going to say read definitions. Yikes, if I could spell. A1 and optimize data to maximize profits. I'm also going to say also suggest times I should not trade. Okay, let's try that. This is a lot. If it does this, well, I'm going to be surprised. ChatGPT 4, the language model, by the way, you have access. If you go into the settings, you have the ability, if you have 4, to plug in your 4 key to this, and the language model, because of the consciousness, will do this way better. And that's actually what we're using is 4 in a lot of these instances. After analyzing data, spreadsheet shows a profit of $2,300 defined by A1, the trading by, okay, so it did this. Oh, here we go. Best, just off of what I gave it, guys. Based on the data, go back. Based on the data, the optimal times to trade are between 9:30 and 11:30 Eastern Standard Time, between 2 p.m. and 3 p.m. It's suggested to avoid 12 to 2 p.m. due to lower market activity. So it's looking at my trades and it's seeing like your profits aren't as optimal or isn't as high during this time. So don't trade during those times. Or you have your biggest losses during those times. And you can massage the goal a little bit to get even more concrete answers. But every time I've done this, I go back in my sheet and I'm like, oh yeah, look at where my biggest losses are. Sure enough, and then it's typically correlated to something, and this will tell you. I've had it tell me like, we noticed that this and this is happening during this time. It's likely because during those days are the most common days to have major news announcements. So going forward, we're going to recommend that you don't trade those times to avoid the fundamental or the major news announcements that are affecting your trade results. And it was just like, oh my gosh, I didn't even know. Thanks so much, Day Trade GPT. But anyways, tons of data, guys. It's giving us times a day. You can have it optimized for profit, and it'll tell you like, hey, you should change your take profit and stop loss to this based on all the trades that I've seen. It'll go and do that. You just have to get creative around your goals. I am so much looking forward, guys. Let's end on this note. What I would ask, I mean, you guys are on this journey with us, and what I would ask is like, be a part of this community. In the chat below this video, put in the AI name and goals that you're just getting like crazy results on, or like you had a major win that like changed how you're doing your trading or changed how you're doing your investing. Share that with the community, because what it will do is it will prompt the next level of prompts that we start feeding this. Like, I didn't even know to have it go check gambling results until yesterday. And it's like, we're the fathers of this creation, and we didn't even think about that. Guys, the opportunity here is limitless. And I'm so excited to hear what you guys come up with and what you guys decide to curate as you're using this tool. So give us that feedback. Todd, any last words?
No, just thanks everyone for being with us today. Listen, a couple people were wondering if this was going to be recorded. It is recorded, and I threw it in the chat. Just go to our YouTube channel at Traders Pulse 101. And in fact, the live feed's going there right now. So you can, even when we're done right now, you can go back and click on the live tab and you should be able to watch this video.
Right. So like, guys, subscribe, and we'll see you next week. Excited to be on this journey with you. See you till next time. Thanks, Todd.
Thanks, everyone. Thanks, Matt.
See you.